I'm excited to talk because I know you obviously were a big help with getting me started in the construction loans stuff, and
Mhm.
um, curious to see how everything's going for you now, what you've been up to. Because
Yeah. Yeah. So, like currently right now, what we're doing a lot of is new construction and typically like first time home, new construction, just because, probably over the last 4 or 5 years, we've been, flipping 4 to 5 a month, all in that affordable housing piece, here in Arkansas. That's 230,000, 250,000 or less. And so, that's where we've been making hay for the last 5 years or so, but really in the last 12 months that it's, how the market's been, and it's
Mhm.
just shifted to more of a buyer's market. And
Right.
we would get page long URSA repair requests on every single deal. Stuff would sit, and so we just kind of said, "Hey, we got to go back to the drawing board and figure out like what's something else that we can do to still be active in the real estate game, but maybe change the score or change the playbook a little bit." And so we've got 26 new builds going right now. Varying from 1,260 square feet to 1,600 square feet, and they're really kind of all across Arkansas. And so that's kind of been the thing that we've hopped into over the last really 4 to 6 months. And so yeah, I'll be curious to see how the newer construction. Of course, I mean those are going to be between 230 and 280,000 on the market, like new construction. So I have a feeling that those are going to sell pretty easily. So
So you got 26 of those going at the same time?
yeah,
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 yeah. That's so. I kind of know your background, how you got started, but I think
mhm,
the thing that for me to watch what you've done, the coolest thing has been just watching how you've scaled it,
mhm,
and then I think now talking about how you've gotten to 26 new builds at a time and how you're doing financing for that, like how all that
yeah,
works. I think a lot of people, um, you're on that you're the next level stage of investing where a lot of people are still on their first or second or third
yeah,
property. So it's like I think I kind of just want to walk through, okay, when you started
mhm,
and then how you've gotten to where you're at now to where you've
yeah.
massively scaled this thing.
Yeah, so I mean, starting off, we bought our first house, gosh, back almost 10 years ago now. And that was a crawl before you could walk type thing. And we didn't have any liquidity. I mean, the partner that I did all that with, we had 10,000 bucks combined, and it was kind of living on a prayer and taking some risk. And that was whenever you're 24, 25, no kids, you kind of just, I just decided, hey, I'm going to put it all on the table. And, if I go bankrupt, I can bounce back in 8 years, and I'm willing to risk it all because I don't have anything to lose right now. And so,
Hmm.
but, started with that, and then really got into the self storage piece of it. And that's where we learned seller financing. And so, we had bought 5 or 6 locations using seller financing on all of them. I mean, we added probably close to 250,000 square feet of storage, and we didn't spend a dime of our own money. And so that kind of got us in the asset class and got us cash flowing and kind of understanding and cutting our teeth on that. And then, then after that, we ended up getting into the buying of course, back then you could buy a decent livable house for 40, 50,000.
Hmm.
And, and then so we got into where we were buying 4 or 5 of those a month, remodeling them and renting them and holding those. And then we ended up, after those appreciated a little bit, then we ended up selling those in 1031 and exchanging those into nicer, 1990s to 2000s brick slab homes. Those are all in Conway. And but so we knew what we wanted to get, but we didn't have the cash to get there. And so we tried to find value in other things and then trade those up once we kind of stabilized those and had a little more equity in those, and then traded those up for more desirable assets of what we were trying to get. And so, the piece of it that I think is important is relationships, and to especially, I'll tell you, kind of the deal that set it off was we acquired 68 houses in Conway in one single transaction. Well, really two transactions, but I had I developed a relationship with some folks that started a bank here in Conway, and I'm on their family foundation board now. I mean, I can kind of consider myself a son of his of sorts, but whenever you talk about, and I know we'll talk about this later, but I'm trying to allude to it, the value of relationships and then private equity and capital raising of that piece. But I developed a good relationship whenever I was working at the title company, and we actually closed this transaction. A guy bought 37 houses on one street, and then he had 31 houses in another neighborhood. That was just a piece of it. This guy's got probably 250 houses in Conway, and I was just harassing him, but basically of like, hey, whenever you want to sell those, I'll buy them. And then so one day, I mean, I worked him for probably 9 months. And then one day he called me and said, hey, I'll sell them. Here's the price. And, it was like 12 million or somewhere around there. And I was like, all right, man, I got to go figure out how to come up with some cash. And so I called the, uh, my mentor and, his name's Bunny, but called him and I just said, hey, because he had done some private lending, like loan a couple hundred here. And I said, hey, I'll pay you 10% interest, and, got it back to him within 60, 90 days. And so we'd been doing that for a while, kind of just short term deal lending. And so we bought those in 21. And so I called him and I said, hey, I got a little bigger deal this time. And so we spelled it out and sat down with my accountant, and who is also the trustee of his foundation, and basically we penciled it all out and ended up doing a debt and equity piece in that group. So they took an ownership in our LLC, and then also funded some of the debt, to where me and the partner that I had on those existing, like, we didn't have to come up with any cash for a $12 million deal. And, we only got diluted down to 37.5% ownership apiece. They took a 25% stake in it and then funded all the debt at 4.5%. So, and that kind of opened my eyes of like, hey, this is how you scale. Cause typically I'd only done stuff with one partner and maybe something a little bit on my own here and there. But partnerships are very important, in my opinion. I feel like if we just say, hey, I'm going to pull my bootstraps up and I'm just going to try to do it all myself, like, you're not going to get real far. I mean,
Mhm.
you can create a good job for you, but it's going to be tough to create a scalable business by yourself. And so anyways, that's how we ended up getting those, and that kind of opened my eyes to the partnership piece of it, and bringing debt and equity in and all that, because that was a pretty complex deal. We sold some, we did some 1031 exchanges, we did some swaps. Like, I mean, it was a pretty complicated deal on all that, but that kind of got us in a different level of the housing piece of it. And then so that was in 2021. And so we'd been, another silo of the real estate that we've been playing in was doing land development. So here in Arkansas, we're talking more rural stuff. Like, we'll go buy a 2 or 300 acre tract and cut it up to tens or twenties, and then sell it for people who want to go build a cabin and do like a vacation rental, or have a part-time residence or something like that. In the area that we do that in, it's very um, it's very beautiful. There's a national river, there's national forest, there's all that type, like a ton of outdoorsy things to do. And it's probably about an hour and 15 minutes south of Branson. So and probably an hour and a half east of Northwest Arkansas. So it's a good little spot to where a lot of people go there. And so we've been doing that for about 10 years, and then that provided a lot of our capital along the way too. But that that really kind of I branched off into some partnerships in that too within the last couple of years. But again, kind of going back to the main point of that, if you try to go do this alone, then that's only one brain sitting at the table instead of four or five. And that's something that I've really that's been a piece of helping to scale up. So and I think it was in 2020, I got a random email, spam email. Of course, nowadays I feel like it happens all the time. You get wholesalers and all that, but back then it was kind of a new thing. And I looked at it, and it was a list of like 100 USDA like foreclosures, and all throughout Arkansas. And so I was like, man, like, I'm going to underwrite some because they were, fairly decent spreads on them. And so I'm going to underwrite some of them. And we ended up buying a big block of them and started flipping houses at that point. And so, we were doing probably two or three a month then. And so that was back when you just slap something on the market, it sells, and people don't really care, And so, because when rates are two and three quarters, like everything's flying off the shelves. But so that really got us into the house flipping back in 2020 and 2021. And really about fast forward, still doing three or four of those a month, consistently over the last 5 years. And then fast forward to about a year and a half ago, close to 2 years ago, I I added up because really what my role is in my business is I find it, I get it financed, I get it closed, got the title background piece of it too, with working at a title company, and so in the past, and so and then I hand that off to my business partner on the back end to get it remodeled and all that. And so that's kind of how our business flowed. And so I just was calculating that I was spending in between 15 and 18 hours a week
Mhm.
on the phone with banks. And I was like, man, like that's killing half of my procurement time throughout the week. And, I'm just trying to get deals done rather than out there turning over leaves and shaking trees to find more deals. And so and I'm sure you've listened to like best ever real estate podcast and some of those. And, I heard something about a debt fund.
Mhm.
And so I called a guy here in Conway that's big in venture capital and all that. And I said, hey, I've got this idea. I want to create my own little private lender uh, entity. And he said, well, you need a debt fund and you need to call these folks. And so that was about January of 24, I guess. And so, anyways, I called them, got that set up, and so it ended up I just made some phone calls to some of the people that I do business with and just said, hey, I've got this idea. I think I can spend you a 10 or 12% return. Can you take a chance, throw 100,000 in here? And so made a couple phone calls, and we had 1 million raised. And then that started Great Rock. And so that's that. So we did our first loan July 1 of last year. And so we started with 1 million, and now we're at 3.5 million in assets, and what we should be at 5 or 6, in between 5 and 6 by July of next year. But what that all that is private capital of investors, people that I know that I've got relationships with, and then some bank leverage, and a couple banks they'll buy some of the mortgages of it and all that. And so, but I wanted to create that vehicle to save me time so that we could go do more. And then I'm not spending times on the phone with bankers, et cetera. Like I love bankers. They're some of them are my greatest relationships, but like I need to get stuff done and get stuff done quick. And like there were times where I get a house sent to me at two on Tuesday. I
Right.
put an offer in, and we'll close on Friday.
Yeah.
And
Yeah.
like I
Can't do
don't
that with
have
a
to.
bank.
No,
Can't do
can't
that
do
with
that. Can't
right.
do that with a bank. And
Right.
so that's that's how I'm able to finance. So we're financing probably, I think, 9 of our specs right now that we're building. And so then the rest of them are bank financing. But I've got a vision to really get our fund to around 10 million to where I can finance 50 houses a year and never use a bank, and and develop all the land ourselves. And because on about half of those, we've developed the dirt ourselves. So we bought it and developed it, and then are building on it now. So I
I got
know
some.
that's I
Well,
know I've ran around the world in 5 minutes, but
well, I could do an individual episode uh on multiple things that you've talked about. Like for example, seller financing. I could do an episode just
uh,
on that. What I so I think the theme of what I want to stick with today is just the private capital raising, especially because
yep.
I have a lot of questions for myself because
Mm,
if you ask somebody, okay, or if I ask you, how do you get your first investment property? You're gonna get the common, okay, you house hack, you do a
mm,
construction loan, you buy your own property, and then or you buy a property for you to live in, and then you
mm,
rent it out eventually. But I'm at the point now where I've got 8, 9 properties, and I have to figure out a way to raise money
mhm,
to purchase. Like I don't want to I don't getting to that point of, well, you're not really spending your own money anymore. You're not having to put
mhm,
15% down at the bank. So maybe we could start because it kind of seemed like the
yeah,
theme of what you were talking about was just the relationship component of that's really
yeah,
how you went from nothing to where you're at now. A lot of that's been built on obviously your hard work, but
mm,
relationships, right? People you know.
right,
So what would you do for somebody like how do you find those type of people, or what would be your advice to
mm,
somebody looking to scale? They maybe have 4 or
yeah,
5 rental properties, and it's like, how do we get to
mm,
10? How do we get to 15? How do we get to 20?
yeah, yeah. So let's just even peel that back a little bit further.
Yeah,
Like, let's
yeah,
go from 0 to 5,
yeah,
right?
yeah.
So how I got started was my very first deal was a self storage deal, and it was a low density, like 60 units. We added about 20 or so. Like, I mean, it was a small facility. And so I literally found somebody that had been doing it for a long time. And I was working at a college, and he was on the board of trustees at that college, and I knew that he did that. And so I literally just pestered him, going to breakfast and like picking his brain for it was probably a good 3 or 4 months. And I mean, he was like, "Hey, we'll meet for breakfast at 6 a.m." And I asked him later on, and I was like, "Man, why did you always want to meet at 6?" He said, "Well, I wanted to see like how dedicated you were and how,
Right,
because Wes, I'm sure that you get this too. That I mean, I can't tell you how many people have called and said, "Man, I want to get into real estate," and then that's where it starts and that's where it stops too.
right.
And so I think he was kind of testing me on that. But I ended up on that first deal. I just said, "Hey, I'll do 50-50 with you. We can use your balance sheet. I'll sign on the debt. I don't care, but I want you to teach me everything." And I said, "All I want you to do is pick this up. That's it. Like, you don't have to do anything." And I'll be out there, boots on the ground. Somebody breaks in at midnight, I'll call the cops. I'll go out there, like I'll show you financial statement or bank statements, show you that we're making money and doing all that. And so he was cool with that, and he stuck to it. Let me tell you. So he let me cut my teeth on all kinds of stuff and learn and run the construction projects of adding those additional units and doing all that. So I mean, I didn't know what I was doing, but I learned pretty quick. And so I would encourage people, if you want to do a property, like, partners are not bad. Like,
Hmm.
in a where I think partnerships can get a little haywire is when you go from, like, Wes, if you and I own 10 houses, how many like questionable decisions are going to be involved in that?
I think it'd be relative, right? It depends on like 0 to 10 is a lot less than 100.
Oh,
Um,
exactly.
right,
Exactly. So, like, if you and I own 10 houses, like, the biggest thing may be like, "Hey, do we wanna replace this carpet after they're out?" Like,
right,
that's
right.
they're very black and white things. But, as a business scales and as it gets more operational driven, then that's where partnerships can go a little haywire. So, I know that's a little tangent, but, like, that's where I think some people are anti-partnerships, but I think that you just have to have a good understanding of where each of your roles are and what everybody brings to the table. But and I'll get to that. That plays a piece in my capital raising now too, in what I do. And I can tell you about a deal that I just got under contract 2 days ago that involves something like that too. But zoning back to the question, so going from zero to five,
Well,
I
and
would find some. Oh, go ahead.
and I was going to ask you because this is probably a question a lot of people. It's popping in my head is that partner that you did that with. Um, what what do they get out of it? Like if you're talking to somebody who is listening to this and wants to implement this, or
Mhm.
me in my case, I need to find investors. That's a fact. What can you offer them that makes it worth their time, money? Because I think one of the questions I've got is
Yeah.
what do they need from me? Like why would they do this with me? Um,
Well, the reality is, Wes, is that we all got help somewhere. And I feel like that's why, like, there's a couple guys that I have sold stuff to and offered to partner with, but told them like, "Hey guys, like, you don't need me as a partner. I'll pick up my phone and answer any questions you have." I can think of 5 or 6 guys that have been, interested in getting in real estate and that we've sold stuff to, and we've sold it 80 cents on the dollar so they could get in it without any cash out of pocket, and just to help them and help them get started. But that also was helping us do something else too. We might have bought it for 60 cents on the dollar 2 years before.
mm,
And so, like that's I always I feel like some people have short memories, and I encourage people to not, because I wouldn't be sitting here without a handful of people helping me along the way. And that's why, like, the people that really want to learn about real estate, like, I wouldn't be sitting here talking to you if I knew you were just doing this for a podcast to go put out on there to get clicks and get listens, right?
right.
Like, I know you've done it, you're out there grinding, and I'd love to help in any way that I can. And so that's why that's I guess that's what's in it for me, and that's why I would help people. And that's why he helped me too. Of course, we ended up splitting it 50-50. Whenever we exited it, I think we got a $60,000 check, and we didn't spend any of our money. That was all bank financing, and we literally were out nothing. So I mean, that's not a terrible return. And so I guess to kind of circle back to that, like, it's not going to hurt anybody. Like, there are enough deals out there that, like, it's not going to hurt anybody to do one or two deals with somebody, split it 50-50 so they can help. Like that's and I think that's I would encourage people wanting to do. So let's say somebody's wanting to get into rental property.
Hmm.
Like, go find somebody that you've got that maybe somebody that's got some, or if not, you can look anywhere. Like, go scrape county records to find people. Maybe somebody that you go to church with, you work with, whatever, that has it. Develop that relationship. Go visit with them, coffee, lunch, whatever. Ask them about it, and just, instead of coming as like, "Hey, I want you to help me," come to it as like, "Hey, how can I help you? How can I add value to you?" Rather than it being the total other way around. And sometimes, and I think with you being a realtor too, I think you've got access to, let's say that there's been some off market deals that have came to me from one realtor in particular, and, we've had conversations about, "Hey, the next time you bring one of these, if you want to take a 10% stake and just roll your commission into it, then man, you can do that too." Like, that's another way to get started, because at the end of the day, investors are trying to find good deals. And
Hmm.
then if you can bring good deals to the table, that's the value that you're bringing, period.
Hmm.
And,
Yeah,
I would venture to say that, you go find a house 50 cents on the dollar and want to go take that to an investor and say, "Hey man, I'm bringing this to you. Can we be partners on this and turn it into an Airbnb or whatever?" Like most sensible people are going to be like, "Hey, yeah, that's fine. Let's do that." And if people are like, "No, I want to do it all myself," you probably don't want to be a partner with them anyways, to be honest with you. So,
that's fair. So if you're in that 1 to 5, or say it's just one, um, let's say somebody approached you, what let's say you're going to look for a rental property. We've all had
mhm,
our first rental property at some point. Let's say you're
yeah.
partnering on that, you find an investor. What do those terms look like? So you said it was 50-50. So is it just, they bring the cash, you do the work, and then it's a 5 years you sell the
Well,
property? Yeah.
I would say the world's your oyster on that, but like for him, we 100% finance the property. We literally used no money. I just used his balance sheet to get it approved. And so, but typically, I would sometimes like if you're gonna have a cash only investor, I think having some type of preferred return on their money and then an equity split could kind of make some sense because let's say Wes, we find a $500,000 duplex or quadplex, whatever, and I say, "Hey Wes, let's," or you call me and say, "Hey, let's partner on this thing,"
Mm-hmm.
but I don't have any money, but I can run it.
Mm-hmm.
Well, from my seat, that's like I could go if I wanted that, I could go buy it and pay somebody 10% to go run it, right?
Right. Right. Right.
So for me, it'd have to be like, okay, well, if I'm going to go front, 100,000 for 20% equity, I'd want some type of return on that money. So whether it's an
Okay.
8 or 10% pref, and then let's say that we wanted to, let's say it's a value add, and the rents are low, and we go in there and do that, and get the NOI up, and let's say we could get it to appraise for 700. Well, then at that point, you could either say with your partner and say, "Hey, you want to refinance this, keep it, and then pull it out and pay your cash back, and then we're all even, or do you want to buy them out, or do you want to sell it?" Like you got a whole lot of opportunities there, but that's why I'd say if you're gonna like go partner with somebody, I try to get a value add property rather than going and paying sticker price for something because it just makes it a whole lot harder to do
Th-
something like that.
that makes total sense. Okay, so then the way you did it,
Mm.
were you can you elaborate a little bit on that? Where you talked about you use his balance sheet, you financed it 100%. So how would somebody go about that?
Well, see, this I don't know that they do this anymore, but this
Okay,
was
okay,
in 2017. So you could get construction loans. So we basically it was an existing storage facility, and so the bank and we submitted a construction budget to like redo some of the shop there to turn it into climate controlled units, and then we added 2 buildings, and so it was a net add of like I can't remember 20, 30 units somewhere in there,
sure,
but
sure.
so we bought it. The bank fully funded the purchase, and then they gave us like 150,000 to go do all that,
Okay,
and
got it, got it.
so
Yeah,
it was a construction loan.
and that see that's where that alone could be its own
Yeah,
45 minute episode. So
yeah,
there's a lot of content out there about construction loans. If you're listening to this and are interested in that strategy, and maybe JD, maybe one day we can do another one talking
yeah.
about it. But because construction loans is what you taught me, and that's how
Mhm.
I got from where I'm at, which kind of is a good segue to the
Mhm.
next 5 to 10, because that's where I'm getting stuck.
Mhm.
Um, and where I've got to start learning from you and others on how to start scaling. So
Yeah.
it's probably a good segue into what do I do right now? Like I got to
Yeah.
start raising capital.
Yeah. So you typically do Airbnbs, right?
Well, I would say my
Or
portfolio's mix. I don't do a ton of flips. I'm more so
mm,
my thing is I want to own property.
yeah.
But I would say 50% of them are short term and 50 are
Mm,
long term.
long term. So are you more like single family or multi? Are they all like single houses or multi units or?
They're all single. And I think a lot of people listening would probably say the same.
Hmm.
So maybe I don't know if that's the right way to do it or if there's a different approach.
Yeah. Well, so so I'll tell you a little bit about a deal that we just got under contract. So it's a 44 unit, completely remodeled 5 years ago. The sellers just had their note just renewed. And so they're going from a 4% rate to seven and a
Mm,
half.
yeah,
So the,
tough.
so I, yeah, so I tell you all this because we're going to buy that and not put a penny down. And so $3.3 million deal. And so the I would say right now is the best time because this is how we bought we kind of so that first house we bought, it was a partial seller finance. So it was I think we bought it for like 120,000 and they carried like 12,000 of it and then we put like 5,000 down or something to get it to basically balance it all out.
Hmm.
So I think you're going to see the mom and pop operators that I would say 40 units or less. A lot of people bought real estate in 2020 and 2021 that shouldn't have been buying real estate
Right.
because it was cheap money.
Yeah.
And then the inflated value of what they think their stuff is worth here on a cash flow basis, it's here,
Hmm.
and their people are probably offering it here.
Right.
So what we've done and what I'm going to be doing really over the next 12 months is targeting those mom and pop operators that are up for renewal and that want up here, but it's really only worth here. But I negotiated to where I'll be like, hey, I will give you your price, but the bank's going to finance 85% of it. And then this 15% margin, I'm going to pay you out over 30 years. And it's going to be at a low interest rate. And that if you like that, great. If not, then you can let it sit on the market and then have your rate adjust and then less people. And then it's just going to sit there and eat your lunch until somebody buys it for down here. And so that's what we did to kind of back when we were trying to grow our residential portfolio. That's what we were doing was we seller finance. We bought some duplexes that way. We bought some houses that way in the beginning. And so that's what we did to get started because you don't want to go spend your cash and maybe like on this 44 unit deal, it's going to be kind of skinny on cash flow, but this can be a whole other thing. We're going to bonus depreciate a lot of it, probably 33% of the whole project, and that's going to have a pretty significant tax impact for us. But like that's a whole other conversation of on certain properties, like why do you buy them, right?
Hmm.
And some are equity upside, some are cash flow, some are tax, and some are a blend of all of them. But I say all that to say um, that type of a strategy, I think, will be a good way to get move to scale up. It doesn't matter if you're at 5 or 10 or 500 that right now we're going to have a unique time to where there's going to be a lot of people trying to exit real estate who shouldn't have bought it in the first place and their cheap money's coming up and you can be a solution to them to say, hey, well, if you want that price for your property, that's great, I can give that to you, but this piece of it, I'm going to pay you out monthly or pay you out yearly, something like that. So because I mean that's I can tell you that that's been tried and true for we've been doing that for 10 years. And it's all situational, of course, but I think you just have to be patient because Wes, do you want to go spend 150,000 of your money or do you want to go let somebody else finance you 150,000 of their profit?
Right. And so would an example of that be you say my next door neighbor has it was a 30-year loan, but they've got 25 years left on it, 5% interest rate. They want to sell. Would that be me coming to them saying, "Hey, I'll sell it to you for the price you want, or maybe a little bit lower, but
Yeah.
I'll pay you 6%, um,
It
and
could
I'm yeah.
G it could look like that. I would also encourage you to look at these smaller multifamily things that are listed on your MLS. So and maybe some stuff that might be a little stale too. So think about your quadplexes, your tenplexes, those types of properties because those are the ones that I think people bought 4 or 5 years ago that they shouldn't have been buying because
Mhm,
and I don't know if you remember, but, like, back in 2020 and 21, real estate was the hot thing. I mean, everybody was all up in it, 4% money, everything was cash flowing at that point.
mhm,
And so I think a lot of people bought those types of properties, and I think those are going to be the ones that you're going to have the opportunity with, not necessarily the one off like rent houses or something, but I'm talking more about the people who were, fatty real estate investors that bought stuff that they shouldn't have bought. And I would encourage anybody to go on Zillow or look on your MLS and just scrape through multifamily and just look at all of it and to see like, okay, how these have been sitting on the market for 120 days, 150 days. Then think about why? Is it a bad area? What is it? Or if it's a nice property, but they just want too much money for it, then pencil in of like, okay, if I go give them that sales price that they want, factor in what a bank note is at 80% of that, and then pencil in on that 20% difference, like get your loan AM calculator out and figure out how long do you finance that to where it makes sense and to where, and then at that point, shoot them an offer. Like, what are they going to do? Say no? What does it
mhm,
cost you 20 minutes to put something on to put a contract over to send it to them?
right.
Like, I mean, we've sold quite a bit of property to folks on owner financing like that. But
Yeah, that's a w we need to then again, that's another f we could do a f I could sit here and talk about that
yeah.
for hours. Um, alright, so then I guess at some point, what you've done all of this, you decided to
Mhm.
sell a lot of your properties or your single family. What made you decide, "Hey, look, I wanna do that, and I'm gonna start
Mhm.
raising a fund," and talk about maybe what the benefits of that have been.
Yeah, yeah. So I've sold a handful of my single families, and I'll probably sell a little bit more, just because I'm looking at the yield on things. So think about the so if I enter into a house, like if I buy a house at my basis is 150,000, and if that thing's only bringing in 1,350 at rent, like that's not a great basis for a good yield basis because I've still got debt on it. If that's it, I've still got some at 4%, some are at 6.5, some are at 7. So, you've got the debt and then you've got, insurances went up. I know it's went up here. Property taxes went up here. I'm sure all that's happened in
Yeah.
Texas too.
Yep.
And then, repairs have went up. Like all of that has went up. And so I'm trying to that's where it comes to me where it's like multifamily is the only thing that you can really scale at a point to where like your entry point, unless you get some creative financing on things like that. That's multifamily is the only way that it can really cash flow given all these unforeseen expenses. Like I mean, I just think about property taxes; they went up almost 60%,
Right. Yeah.
since 2020 in Arkansas, and then insurance has doubled, and you like rents haven't doubled, and so who's absorbing that cost? Us,
Right.
as the property owners. And so, that's just that's why I've looked at just a pure yield standpoint. And then so my fund has been kicking out 12% returns. So I have a hard time of looking at a bunch of houses that I might get a 6.5, 7% yield on whenever I could put money in my fund, kick out 12% to me, and that gives me more liquidity to go do more new builds, to go do more, deals that way. And so that's why I've made a little bit of a shift to sell some of my hard asset to roll into that. But I mean, I'm not offloading a ton of it, but just
Right.
a piece of it to do that because we've got the vision to go build 50 affordable homes a year, and I don't want to spend countless hours on the phone with bankers. I want to be able to go do that, find the lot, and say, "Hey, we want that," and then let's go break ground on it. So
So how have you gone from? I mean, when you originally started, it was one person that you made a partnership with that was
Mhm.
willing to help you out, and how have you gone from that to now having multiple? I don't know how many investors you've got, but you got a lot, and people
Yeah.
people like me, it's hard to find one
Mhm.
that makes sense. So just speak to that a
Yeah.
little bit.
Man, I don't know if it's just shaking the right trees or what, but I think if you find people that are in the same business as you are and then realize that everybody's in it together and that's what, and then also always trying to provide value to people and not being like, "Hey man, I've got it all figured out and you don't." Then I think, and I also I try to be the dumbest person in the room anywhere I go because I want to be around people and that are smarter than me and that maybe I can bring a little bit of value to. And so, I mean, I've literally had calls with 3 people this week that are, putting have committed to put capital in my fund that, they're probably 15, 20 years older than I am. But like they like what we're doing, and then I've somewhat structured it too to where if you want to, like, this 44 unit apartment deal, like, if you want to kind of get a chance to, after I piece that together, if you want a chance to be a partner on that, then I really want you to be a member of the fund too. And so to kind of create my own little investment club, if you will. But
That's smart.
I've
Smart.
I've kind of lived and breathed this for 10 years and always like trying to figure out how to do things better and talking to people a heck of a lot smarter than I am. And so that's what, and trying to learn from that. And, that's, I'll sit here and tell you, like, we are not great at building new homes because we've kind of just started it. Right. But like, we're not putting a bad product out there. I'm just trying to figure out how to streamline it and do more and be more efficient with all that. And because we had the flips figured out, I mean, but new construction is a little bit different. You can work on a flip when it's raining. You can't pour a slab when it's raining. So, that there's just whole different things that I'm kind of learning about too. But I know it's a little bit of a tangent, but the I think that dealing with different people throughout business and then being able to understand and properly articulate with the partnership piece of it, like I really only have one partner that is active in what we do. The rest of them, I make it very, very clear that, hey, you're a cash investor in it. Like, you're not any less of an owner than I am, and I'm putting the same amount in as you are. But like, I'm going to run the project. I'm going to keep you informed of all of it. And if you're wanting to call me every day and ask me what I'm doing and why is this and why is that, this isn't going to work and we're not the partnership for you. But like, I can, if you understand that, hey, this is a cash investment and that I'm going to keep you updated, and feel free to ask questions. But like, if you want to, it's either you're going to let me run it or this isn't going to work. And I know that sounds very harsh, but I don't have time I've probably got, I don't know, 15 to 20 different partners on different things. And if I'm fielding 2 or 3 phone calls a day or a week from each of them, that's eating into my time that I can't do my job to work and churn out for them. So
Makes sense. So what type of returns do your so I'm assuming you probably have some sort of minimum investment. Um,
yeah,
and what could I expect? Is there I give you the money and I'm going to get X
mm,
amount in return?
yeah. So really it varies. So I'll use a couple of different scenarios. So the fund, for instance, the minimum investment is 50,000.
Okay.
And it's a 3-year commitment. But what I tell people, because I've been in some, I've done a few passive investments where I've cut the check, and like that it hasn't went how it was portrayed to me,
Hmm.
and I've sat on that side of the aisle, And I've voiced my unhappiness for 12 to 14 months, and it took me that long to get bought out of them. And I've sat on that side. I've experienced that. And what I
Mhm,
tell every person that, yeah, you're signing that it's a 3-year commitment, but if there's some part of this that isn't what I told you and you don't like it, I will personally buy yours out, buy your and give you your money back, and I'll buy your piece, your share of it, and rock on. Because the last thing I want is somebody being unhappy and thinking that I sold them a bill of goods that I'm not. And you know, Wes, a lot of folks. So I'll use an example of this was a 211-acre tract that we bought, and up in Newton County, so Jasper. This is the area that we develop land. And so I did a $200,000 capital raise on that. We got some debt on it too, and so I took a 20% stake in it, and I still put 40,000 of the 200 down. And so, but most people doing what I do, they won't put cash in the deal, and they'll take equity out of it too. And I just like I don't feel right doing that because I feel like I'm out here doing my job, and if you know, and bringing value that way, and I don't feel like you should give me anything. And but that's a I think that has also helped me build relationships with people because
mhm,
Wes, it's easy for for me to say, well, hey man, I want to go buy this, but I need all your money,
mhm,
right? And that's I would always be a little bit leery of that, like, whoa, okay, like, well, you want me to take all the risk, and so, but anyways, that's why I always try to contribute equivocally of what other people do, just because I don't want people to. I just don't want the optics of that to look like I'm using everybody else's money and giving them all the risk and not participate in that as well. But I do
mhm,
that with my fund as well. I'm the highest ownership percentage of that, and I'll continue to have that piece just because, again, I want to be able to look people in the eye and say, hey, I've got more of my personal I've got the most personal cash from anybody in here in this. So I'm dedicated for that to succeed. But
no,
um
yeah, that's good, good perspective. So let me
but well, and let me
yeah,
get
yeah,
back to your question
yeah,
on that because I know I kind of went around the block on that. But like, so from a returns perspective, so on
yeah,
that piece, on that land deal, they so that we got that 2 years ago. They've already got every investor's already got half their return back, and probably we've got I think about 60 acres left to sell, but it's looking like the investors should get around a 200% return on their investment.
wow.
So, because we're in a pretty good cash position and we don't have much debt left on the property, and so it's looking like if you put 40 in, that you're going to get at least uh 120 back. So,
Over 3 years, so that was
yeah,
a
yeah,
so it was a 40-year one time. So they're giving you
one
check,
check.
one check. They have to wait 3 years, and in 3 years, that's when they get the return. Okay, got it.
Yeah.
So what? Let me ask you a question. Okay, I've always wanted. I love the Airbnb part of real
Hmm.
estate or short term rentals. Like I like the experiences. I like the
Yeah.
long kind of vacation rentals. I would love to have an Airbnb or a short term rental. I kind of have my I'm not a big Airbnb fan right now, but a short
Hmm.
term rental
Yeah.
um in every state. So if I was to say, okay, JD, I want to buy a property in Pensacola
Hmm.
and I want to buy a beach house and it's going to be $1 million at least. Um, and I know I need investors to do this.
Hmm.
What would your advice be to me on how what would your approach be to make that
Yeah.
goal happen?
Yeah. So we've actually looked at some of that too. So this is kind of like fresh on my mind of like, how would we do this? So this kind of spins off of like an example that I didn't get to, but I'll talk about it before, or I'll talk about it from the previous question. So there was a block of, this was probably 3 years ago, I think. I found a block of about 40 houses off market deal, about 65 cents on the dollar. So I didn't want to take down all that at once. And Wes, I'm more of a, I'd rather get a little piece of a lot of things than have all my cash in one deal to be able to say, hey, look at me, I own
Hmm.
100% of this. Like
Right.
I'd rather have little pieces of a lot of different pies. And so whenever I found that, I split that up into three different segments, and I carried on different partners for all different three pieces of it. And so this is where I think again, it's finding the value. So, we were coming in, we were able to 100% finance that whole deal. We needed a little cash up front to get it bought, but then I reworked some of the loans and we got all of our liquidity back. So, um, with that, I think if you can find the value in a deal and then you bring a partner in and then you create some equity. So what we did with those houses, those 15 of the 40 that we bought, I then took a line of credit out, and then we used that to go buy 7 duplexes in Conway that we've just finished up remodeling. That we're sitting at an 80% loan to value there. So we're going to look up and have $250,000 of lines of credit underneath our 80 to 85 LTV that we can then go use to go do something. So that's one route. That's kind of the long play, but I think that if you go provide value to investors, this is one route, and then I'll go to the cash route, just, hey, raising the
Yeah.
piece of it. But like, this is where I think that if you find value in properties and can bring other people in to say, hey, here's a deal that you can walk into and you'll probably get your money back in 6 to 12 months, and then you got the equity, and then we can go do something else with it. Like, people, you don't have to sell that. Like, people are going to be like, well, shoot, yeah, sign me up. Here's a check. And then, you do that a couple times, and then they've got friends that are like, well, I got a buddy over here that's got 100 that he's looking to do something with. And then you look up and you got 7 or 8 people that have that. And then you got 1 million that you can do something with. So that's, that's one route that we've talked about, that group of, because we got three of us that, well, really all four of us that have an interest of being at the beach and at times. And
Hmm.
so, like, hey, would we want to use some of this equity to go put down on $1 million beach house? So that's one that's kind of a longer play,
Hmm.
but it's, I think real estate, we want it now, we want it quick. And,
Right. Right.
we're in that very fast, we want it, feel it, touch it, see it, real society. But I think that if you're thinking about long-term partnerships, you bring value, things appreciate, you trim them up, get the NOI looking good, and then you can leverage them and then go do more. That's really the only way you can scale. I mean, think about, I'm just going to use Trump as an example.
Hmm.
Like, you think that he doesn't have any debt on anything?
Right.
He's got a bunch of debt. It's all
Right.
leverage. And
Right.
he, like, people don't just wake up and have droves of cash sitting here and then they scale the next day. Like, you got to get equity, you got to leverage it, make good calls, and then leverage it to other things that you can leverage more and more and more and build. And that, like, that's how you do it. You, because if you sit back and saving $1,000 a month, you're going to be sitting there for 15 years and maybe you pay cash for 4 houses. Like, it's just that's,
Right.
you're not,
Right.
like, I respect Dave Ramsey, but some things I disagree with.
Yeah.
And so,
Right.
but I know that's a little bit of a tangent, but I think, I'd love to give people that vision of, like, okay, let's make a 5 year plan of, like, hey, I want to get a beach house down there. Can I go find a value add eightplex that I may not have the cash for, but I can go find people who do, and but I'm going to bring the deal. And then that, I think that thing could be worth, we might have $400,000 of equity in a year or two, and then we can use that to go buy the beach house, right? So I think that's one way of doing it. And then I would encourage you to get familiar with depreciation, and because I think if you have, it's a lot easier of a sell to people if you say, hey, do you want to have a house in Florida? A, and then B, we can pay you 10% on your money. So let's say that you need, $200,000 for $1 million beach house, and we can say, hey, you'll get a 10% pref or an 8% pref, but we can bonus depreciate half of it on year one. Like then you basically get your money back year one or close to it.
From a tax standpoint, yeah,
Yeah,
that's
if they're high earners. So like that's one way to position it to where you can get people interested in it. And
that's
so
that's really, I never thought about that. So, but okay, so in that case, you would have to own it together. So is that you would create an LLC with your
yeah, just
partner?
go create because I've got a bunch of LLCs, and they've got different ownership pieces, and so that's what I would suggest. If you can, because if you find high earners, the average person isn't really that great at figuring out how deductions work and depreciation work, and because that's really the hidden gem of real estate, is that that can save you a lot of money.
Mhm.
So I mean, just think about, let's just say you're only able to bonus depreciate half of it, right? So that's 500,000. Okay. Well, if you go put 200 grand in, that is, and let's say that your tax rate's 30%, which most high earners is going to be more than that. Let's just say it's 40%.
Mhm.
So if you depreciate 50,000 or 500,000 in 1 year, you've already saved your $200,000, because the 40% tax rate would be $200,000, and you just wiped out half a million of income passing through. So like that's the thing that I think, if you find high earners that want to have a beach house, or you have people that have money that need some depreciation that want to have a beach house, it's like, hey, you can present it like that and say, well, hey, here you can do this, and then here's what we're going to do is bonus it, and then boom, because that's what I did on this 44 unit deal. I told them, hey, this thing isn't going to cash flow like super duper well. It's got some high equity upside, and we're not having to put, like, we're going to put 200 in an account to just have operating expense. But this is really a tax depreciation play.
So if I needed 200 grand for a beach house, four people at 50 grand each, I would need to pay them. And again, this is just, I know there's you could fluctuate this stuff, but I'd need to pay them 10% interest on that money each. And and how would we position the structure? So there's four investors.
Well, so yeah, so what you could do is say, hey, four of y'all bring 50,000 a piece in, and then we're going to each be 20% owners. So, and that gives you 20%.
Of the
And you could
equity.
say, yeah,
Okay.
and say, hey, I'm going to pay y'all 10% on the money, on your money, like a 10% pref. And then the, whenever you sell or whatever, then it's in fifths, right? But that it's a fifth ownership. But what you get for putting the deal together is you get 20%, but they're paying for it, but you're in a way paying for that too. And you could really make it to where the business is paying that, because if you think about it, like, you could make it a 8% pref, like, from the business.
From the cash
So
flow of the
yeah,
property or the, yeah,
exactly,
yeah, yeah,
exactly,
yeah.
exactly. And then you could just say, like, hey, let's say that the thing doesn't, let's say that there's a shortfall of 10 grand for the year. After you get cash flow, you're paying your debt down, and then you pay them their 8%, but it's 10 grand short. Well, you can say, well, hey, I'll cut you a check for 10 grand, to make up that difference, or whatever, whatever you feel comfortable doing, because at the
Yeah.
end of the day, you're getting 20% ownership in something for, at that point, 10 grand, but you'll probably have enough depreciation to help offset that. So,
Man, listen, we're hitting an hour. I could go on and on and on, but no, this has been good, really good.
but, well, yeah,
Uh,
ask me a couple more questions and we can wrap it up.
how can I help you? That'd be
Yeah.
my biggest question.
For me, I think that it is, I'm just looking for value add opportunities, and, for multifamily, really, like, I like the stuff that looks terrible,
Hmm.
and, that, and really for multifamily, because we're kind of getting out of the fix and flip housing stage. But I think I think there's going to be a large opportunity in the smaller to mid-level multifamily space. So, you see a rundown apartment building, or, rundown 10-plex, quadplex somewhere that's maybe it's not listed, but just see it and say, hey, let me call those folks and see if they'd sell. Like, I think looking for those opportunities, I think that because a lot of times I used to drive around, take pictures of stuff, and then go look up who owned it and call them and try to buy it.
Mhm.
Now I kind of pass that along to a couple realtors to do that. But like some people call that driving for dollars,
Yeah.
whatever. But
Yeah.
like I just like going and trying to find things that look like people should sell them, and then call them and be in the solutions business of trying to offer a solution to them wanting to get rid of their property. And I say all that to say, like, hey, if you find any deals like that, I'm interested. And
Even
you
here
know,
in Texas, you would consider?
yeah, we're wide open on that. It doesn't bother me. I mean, I'm also do some work with the title company on a contracting basis, and we're scaling into Texas, into Oklahoma, Missouri, Alabama, Florida, and so we're actively are in those areas, and so like that's why it doesn't really scare us to look at areas or look at properties in those states and different areas. So, but I think that for people that are listening and like, man, like what like how do I get to a next level? It's like you got to bring value to somebody, and if you can find the good deal, and then that's a huge piece of the value, right? Because that's not that's a gift for people being able to find good deals. Like it really is. It's hard work and also a gift because you can you can go by and see the thing that's fallen over and be like, man, somebody should buy that. Well, yeah, somebody should, and somebody should fix it up and get it running right. But who's going to go pick up the phone and talk to somebody and get them to where they understand that yeah they should sell it and that they would sell it. Like that's you have to have the gift of gab and the gift of relationship building and creating common ground and helping people understand that you're there to help them, not rip them off.
Yeah.
So,
Yeah.
but
That's good to know. I mean, I'll intentionally look for that here in Dallas and especially in Waco because I know that area really well.
mhm.